In 2017, we then went from around 1,000 to 20,000. So just to show you guys the equivalent, if that were to happen of same scale, we would go from around 100,000 to $2 million per coin. Do I think that's going to happen? No. My prediction is still 250,000 to $1 million at some point next year. But just to give you guys, like, listen, I've been here. I've been around for a long time. I've been in Bitcoin for 12 years. I think 100,000 is a big round number. We'll take our time here. Again, markets go down as quick as they go up. So if you have a market that goes from 0 to 1 million in one day, it's going to come down just as fast. So Bitcoin is consolidating and building a lot of strength here. It's actually very impressive.
Today we are joined by Jack Mallers, who shares his insights into the price action and market dynamics for Bitcoin and why he's bullish in 2025. As the CEO of Strike, Jack Mallers says Bitcoin represents 1% of the world's wealth. After BlackRock emerged as one of the primary players with its iShares Bitcoin ETF, Mallers knew it was heading straight to $1 million per coin. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness Bitcoin's price cross another all-time high, which will mark another historic milestone for the Bitcoin community. After a nod from the SEC earlier this year, he believes Bitcoin has crossed the threshold into permanence and serves as the gateway for substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Let's get right into the latest interview with Jack Mallers, as he gives his outlook and price prediction for Bitcoin and where we're headed in 2025.
Remember what I said? I thought $100,000 was going to be a really important level. It's a big psychological level. And also, for the record, we just went straight up like this. You see my arm? This is good education right here. You see that? Straight up last month. We went up 40% in a month. Markets need time to calibrate. Markets need time to sell off. Markets need time to calm down. $100,000 is a round number. If you ask someone that bought Bitcoin a long time ago, when are you going to take profits? They're not going to say, oh, I think $96,200 or $78,400. They're going to round number, $100,000. That's why markets like round numbers. Markets are comprised and made up of humans, just like you and I, right? And humans have a lot of emotion. So markets love round numbers. $100,000 is a really round number. It's a big psychological number. You're going to see a lot of sell pressure there. And I think the market is going to take a second to calibrate and get itself to push through. So everyone's always like, Sailor's buying all this Bitcoin. How come it's not going higher? I think you're underestimating the psychological level that $100,000 brings. Now, with that being said, should you try and time this market? Should you short this market? No. I only own Bitcoin. So for all I know, we could blast through 100,000 in this month, in a few weeks. Don't get it twisted. But the fact that we're a little bit below 100,000 doesn't surprise me. It does not concern me. It is all good. It is all good. This is very classic halving behavior. Let me tell you guys a story. Back in 2016, there was a halving, okay? So the first halving was in 2012. The second halving was in 2016. So it was the second halving ever in 2016. I was there, and Bitcoin was trading, gosh, I want to say it was in the hundreds of dollars. I want to say a couple $100, $400, $500, something like that. From the halving in 2016, which was around spring or early summer, if I remember correctly, Bitcoin went from, let's call it $400 all the way to $1,000 by New Year's Eve, 2016. So it ended the year right around the time we're at now at $1,000. And that was a massive psychological number for us at the time. It was like, whoa, one Bitcoin, $1,000? No way. And a lot of people that were mining Bitcoin on their computer were cashing some out at $1,000. It was crazy. And Bitcoin dipped a little bit from 1,000 to open the new year. It fell down to like 800. And then in 2017, it went from like that 800 to 20,000. It went from, so that halving cycle, Bitcoin went from like 400 to 20,000, by the way. So that's like what, like a 50x or something like that. And it kind of reminds me of that, where we end the year at such a big psychological number, where you're seeing some selling, you're seeing some buyer's exhaustion, right? There's holidays, people that run and operate big funds and have big important jobs are taking time off, be with their kids, be with their family. A lot of people cashing out, taking care of themselves, celebrating. And you got this big psychological number. But in 2017, we then went from around 1,000 to 20,000. So just to show you guys the equivalent, if that were to happen of same scale, we would go from around 100,000 to $2 million per coin. Do I think that's going to happen? No. My prediction is still 250,000 to $1 million at some point next year. But just to give you guys, like, listen, I've been here. I've been around for a long time. I've been in Bitcoin for 12 years. I think 100,000 is a big round number. We'll take our time here. Again, markets go down as quick as they go up. So if you have a market that goes from 0 to $1 million in one day, it's going to come down just as fast.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, leads the charge in obtaining regulatory approval for Bitcoin ETFs. Moves like this, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
On 60 Minutes, John Reed Stark, the former chief of SEC Office of Internet Enforcement, he said, every single crime you can conceive of is easier to do now because of crypto. And I'm going to go to my next slide here because the quote was remarkably impressive. I got to give it to him. It was impressive from the sense that he took every single piece of FUD, fear, uncertainty, and doubt, and somehow squeezed it into a sentence or two. He said, every single crime you can conceive of is easier to do now because of crypto, especially ransomware, sanctions evasion, money laundering. It was remarkable. So what I did, my first point on this is I went and I highlighted crypto here. You see how I highlighted that in orange? Because I think the main point and the first point is you can take crypto and you could flip it and swap in any other significant technology, and this statement would still be true. How about this? Every single crime you can conceive of is easier to do now because of the internet, especially ransomware, human sex trafficking, sanctions, money laundering. North Korea is financing their nuclear weapons program using the internet. Or I made another one for you guys. What about this one? Every single crime you can conceive of is easier to do now because of cell phones. We have to stop them. If someone makes a phone call that's a criminal using an iPhone, we have to tell Tim Cook and shut it down. No, of course not. Listen, the reality is technology is neutral. Okay, I'm going to say that again. Technology is neutral. Bitcoin is software. It's open source code. It doesn't have an opinion. It doesn't lean this way or that way. It doesn't jump up or down. It's neutral. Human beings use technology and tools to do things. Now, they often aren't neutral. Human beings can, at times, be criminals. For example, the criminal's favorite money to use historically, according to data, is the US dollar. So, the notion that Bitcoin is somehow advancing criminal activity is ridiculous and it's absurd. Bitcoin is a technology, much like the internet or even cell phones in this example. And it is neutral. It is advancing our ability to do things fundamentally, and it is a neutral technology, period. The guy went on to say and explain how because Bitcoin doesn't have a balance sheet. It doesn't have annual reporting. Bitcoin, the protocol, can't comply with SEC enforcement and regulation. It was like, listen here, hotshot. Oh yeah, FTX, they had a balance sheet. They complied with regulation. That stopped them from committing heinous crime, right? Wrong. What about Enron? They complied. The SEC and Enron complied. Did that stop them? Wrong. Every single bank on Wall Street was complicit and they complied in 2008, right? Did that stop them? Wrong. So all of the comments were ridiculous. It was almost as if this guy did it on purpose. It was crazy. It was like, how can you jam so many FUD buzzwords in one sentence? It was remarkable. He got up there. It's like legs crossed. Let me back up. This guy was such a doofus. It's like legs crossed. Crime is now better because of crypto. You don't know anything you're talking about. And you could take crypto in your quote and replace it with any technology and it would be true. I mean, I'd have to be a caveman to operate and comply in the world that you want to live in. So just about destroying FUD, listen, on a more serious note. Again, technology is neutral. So when your family and your friends ask about these quotes, you have to remind them technology is neutral. Take Bitcoin or take crypto and replace it with the internet. And it still remains true. Should we get rid of the internet because some people used it for bad things? No, absolutely not. Now look at this, guys. Look at this. This is ridiculous. If you were to stay in fiat, you would have gotten debased. If you were to put it in a high yield savings account, ooh, high yield, I'm getting whatever, 2% on my cash. Who cares? If you were to live on Bitcoin, look at how much you would be up. This is why I say life gets like half off. If Bitcoin average is going up 50 to 100% every year on average, listen, bear markets happen. You need to be fiscally responsible and prepare for that. You shouldn't be getting bottle service. You shouldn't be flying private jets, right? Be fiscally responsible here. But this incentivizes you to save. It rewards you to save. You finally have a money that acts in your best interest. Okay? And if I go to the data tab, this has all of the data. So it would go to show, like, listen, this is when you would buy. This is the price you would be buying at. Okay? Right? This is how much taxes you would owe. So guys, this is net of taxes, net of fees. Okay? So everyone on Twitter is like, he's not including the fees. Yes, I am. Oh, he's not calculating taxes. Yes, I am. What do you guys think? I'm a liar? I live this life. I do this. I do this. I live this life. This is my life. What do you think? I don't know what I'm talking about? I know what I'm talking about more than anyone else in the world. Come on. Come on. So look, start date, November of last year. End date, November of this year. Your life got half off. With taxes, with fees. If this doesn't help you understand it, I don't know what will. I literally don't. Taxes are not a problem. In fact, taxes are a good thing. Let me say it this way. If I never paid taxes on Bitcoin, that means Bitcoin didn't go up. Do people understand that? Owing taxes mean you made money. You made money. Listen, no one loves taxes. We can all agree on that. That's not an egregious hot take. No one likes taxes, okay? Let's say that. Let's put that out there. However, the fact that I would owe taxes means I made money. That's a good thing. If I didn't owe any taxes, that means the strategy's not working, okay? So it's a good thing that you have to pay taxes. It means you're making money. It means you're avoiding debasement. You're only paying a portion of your gain. So the profit is everything else. And this thing is so profitable. Owning Bitcoin is so profitable. You're making 50 to 100% a year on average. Okay? And everyone's like, we'll talk about the bear market, talk about the bear market, talk about the bear market. What about it? What about it? Here's my rules of life. Rule number 1, don't be an asshole. Don't spend more than you're making. if you're making $10,000 a month, don't spend $11,000. So live within your means, cut down on your expenses. Make sure you account for bad things happening to you. If you live a life that prevents you from saving, then you need to check your lifestyle. That's not Bitcoin's fault, okay? What I tell my friends in high school all the time is this. Okay, here's a thing that will change your life. All you have to do is buy it and not sell it. Now here's the catch. You're like, what's the catch? That sounds too good to be true. Here's the catch. It's gonna go up a lot and then down a little, and then up even more and then down a little, and then up the most and then down a little. And they're like, what? That's it? That's it? What else is the catch? No, there's no other catches. It's just not gonna go up in a straight line. And they're like, oh, sounds like a steal. But then on the internet, everyone's crying and moaning that it could go down for a little bit. Explain to your kid why they have to take out debt to go learn how to do math at college because you were too scared to own Bitcoin because of bear markets. Good luck.
Jack Mallers challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Mallers asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Mallers highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Mallers also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Jack Mallers? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?